Hello and welcome back to Dúchascopy TV. Today I'm joined in the studio by Cheryl Hicks from Quadia Impact Finance to discuss the recent outcomes of Rio+20 and what it means for impact investing. Welcome, Cheryl. Thank you very much for coming in today.
Thank you, Doireann.
So you were actually at the Rio+20 meeting. Can you tell me a little bit about how the outcome of the Rio+20 meeting actually impacts impact investing?
Sure. I think what we saw in Rio is and it's been reported in the news since, is a failure of global governments to come to an agreement, a global agreement on accelerating action towards sustainable development. And I think there was a unanimous disappointment with the draft that came out of Rio. However, for impact investing, I think there were some other important things that came out of Rio, and one thing that we saw almost immediately once there was already wind that the draft would not be very ambitious. What we saw is other actors in society really stepping up their roles and really gaining new energy and momentum to take their initiatives forward, and whether it was business. National and local governments as well, and also increasingly new types of collaborations, public-private partnerships, but even expanded to really more complex coalitions to address different issues. And I attended, in particular, the meetings of business in Rio, and the message was clear coming from business. Once there's no global agreement, that the absence of a global agreement would not stop the activities that business was driving in terms of innovation and investment towards sustainable development. And this is really important and positive. And I think in terms of impact investment, then this is a great opportunity to see the more active role that business will play and the opportunities then for co-investment in helping to drive efficient capital to priority areas for sustainable development.
Okay, and what policy changes do you expect that may affect investments?
Sure. On the policy side, as I said, there was an absence of a global agreement, and I think that many actors were hoping for a framework in which to operate within. But one of the positive things that we did see was the agreement to initiate sustainable development goals, and this is really a follow-on or an evolution from the Millennium Development Goals, which were discussed in 2002 in Johannesburg at the last summit on sustainable development. And this is really positive for impact investing because what that will do, the setting of goals and targets really helps us also to benchmark our priorities to understand where capital can be most efficient and which issues are most priority. It will also help us in terms of measurement. And it will help us to benchmark, for example, the progress that we're having towards these goals. So, for example, if we're investing in sustainable farming, sustainable development goals at the national level and even the global level will be able to benchmark how far our investment or how our investment is addressing those goals and by how much, and to measure the progress and impact. On the policy side, there was a lot of talk as well at the summit and pressure over subsidies. So I think we'll see some interesting rethinks and changes in terms of subsidies, and in particular around fossil fuels. There was a lot of pressure to really eliminate unfair subsidies for fossil fuels, and that is in the text draft. I think there is some debate on the language there and how governments will react to that, but that was definitely positive.
And what were the most discussed themes at Rio+20 that investors should keep an eye out for in the near future?
Well, I think there were many things actually that were quite different from the last 10 years. And, in particular for investment, I think there was also a clear message in the absence of these global agreements that investment also needs to raise its game. There is a huge opportunity with a increased lack of public funding for private investors to get involved. And some of the areas that we saw conversation around, which was new, were the areas of sustainable consumption, for example. So in the last decade, there was a lot of focus on investment in efficiencies, whether it be production, sustainable production and efficiencies there. And now we're looking more to the demand side, to the consumer, or to the everyday person and citizen, and the innovations, the products, the services that will help people to reduce their consumption impact, both in developed markets and also to bring consumption levels to sustainable levels for quality of life in developing markets. So sustainable consumption and investment opportunities there is, I think, is an area that I think we'll see more of. Another area is around SMEs, small and medium-sized enterprises, and more investment in small and medium-sized enterprises that are addressing critical sustainability issues. I think we've seen a lot of success in the area of microfinance, and certainly as the evolution towards impact investing coming from microfinance. And now we're seeing microfinance institutions really growing up into institutions that also support small and medium-sized enterprises, and this will bring a lot of opportunity for impact investors as well. And the final area, I would say, would be around ecological infrastructure. And infrastructure, and particularly on the urban and city level. As urban development becomes a critical area for development as populations grow, there's a lot of investment required in infrastructure, and that is increasingly being termed ecological infrastructure, or also having the infrastructure to manage our natural capital and social capital.
And finally, Cheryl, in terms of impact investing, were you personally satisfied with everything in the declaration, or do you feel that there were any vital elements that were actually omitted from it?
I think there was, again, general disappointment on the final draft, that it was really lacked ambition. There was really not too many new things from 20 years ago, Rio 1992, the Earth Summit. This was really disappointing from a general sustainable development point of view. However, in terms of impact investing, I think it's really positive to see business taking a more of a leading role, or we expect business to take a more of a leading role in the absence of these global agreements. And this will be really positive for impact investing. Also, the setting of goals, which will make it easy for us to prioritize where capital can be most efficient, and also to be able to measure those goals and really prove the impact that our investments are having. So I see this as really positive, and I think that we did see a large group of investors and impact investors in Rio really lobbying for this cause.
Perfect. Thank you very much for coming in. It was a pleasure having you in the studio today.
Thank you very much.
Thank you for watching Doireann TV, but please do stay tuned, as I will be back later to discuss the challenges facing private banks in Europe. But for now, goodbye.